Happy New Year, everyone. I hope everyone had a great holiday season and got 2022 started off on the right foot. This week, I'll be catching you up on some telling news over the last 2 weeks with the economy, Southwest Florida's local market data trends from December, and some possible turbulence to prepare for in this year's housing market. That's coming up right now. Thanks for joining me today. I'm Rick Harrison with MVP Realty in Southwest Florida, and today we're looking at the local, national, and international stories affecting the real estate market so you can prepare and make better decisions with buying, selling, or investing in Southwest Florida this year. All right, let's dive on in with December's monthly data and see what it's telling us. All right, so let's get into the 7-day market update. We are comparing post-Christmas, which was December 27th. We're comparing that to this week. As I said, if you had been following or watching me over the last couple of weeks, when I did this last post, which was post-Christmas, I had mentioned that I believe the numbers had fallen significantly, simply just due to the holiday season and people wanting to stay home and have somewhere to spend the holidays and not have to worry about showings and things like that. So we did see a lot of the numbers decrease from our previous trends that we had been seeing. So this week it would be no surprise that from 2 weeks ago that these numbers would be much higher. New listings up 191%. Really, that was down 50%. So this is really returning actually a little bit lower than what we had been seeing before Christmas. So we're at 604 versus 315, which was right after Christmas. 604, that's about where we've been seeing the inventory stay every 7 days for any given day. 604 to 700, sometimes 800 is what the new listings are on the market at any given time over the last several months. Solds didn't even change. So actually, in reality, when it was post-Christmas with so many fewer listings coming on the market, sold being at 788 was actually much higher if you did a ratio. But the solds have not changed that much since then. Simply a one listing change. The big story this week is more the price decreases. That's up 216%. So with the price increases being up 216%, that means that more people are willing to sell their home for less. So there could be a variety of reasons. There has been an uptick in pre-foreclosures and short sales. So those people really do need to sell fairly quickly in order so that they don't get foreclosed on. So that would be one reason why you might be willing to have a price decrease in order to get the timing down. Other reasons might be that just simply over the last year and a half, the market has really gotten a little bit greedy as far as prices. And I think a lot of people started to put their homes on the market for unreasonable prices. The market is responding and people are willing to wait for those prices to come down. So we're seeing an uptick in that as well. And then the pendings are also up 155%, which is no surprise. There's more inventory on over the last 2 weeks versus what there was post-Christmas. This week, I wanted to do a quick comparison just so people have an idea of what the inventory actually looks like when you break it down by the property type. So this week with single families over the last 7 days, or what's on the market right now, we have 2,057 properties in the entire MLS at our single families. So those range from 70,000 up to almost 30 million as a high. Condos, this includes condos, manufactured homes, villas, carriage houses, things like that. So anything that really doesn't fit into a single family. There's 899 total listings on the market for that, with a low of 24,000 and up to a high of 17.5 million. Multifamilies, this has been a big story that I've been following over the last several months. Listings for multifamilies have typically been hovering right around between 80 and 90 listings any given day. That's been decreasing. I think there's a reason why less and less people are putting their multifamilies on, simply because really the environment that we're in right now is perfect for an investor. You have inflation, which makes it actually cheaper for you to pay off your house. We also have an environment where such low inventory has been driving people to rent instead, which has been allowing investors to drive up rental prices. So they're capitalizing there. And then you also have the triple threat, which is the equity in the houses. So the property's values have gone up significantly too. So really an investor in this environment is winning all the way around and will continue to win as long as inflation and the economy stays the way it is. So we have a low here of 169,900 and a high of 2.975 million. And then as far as rentals, I know this is a big topic right now. A lot of people are looking for rentals simply because of relocating and not really knowing where to move, but also the fact that prices have started to get out of reach a bit. And now, as you're going to see with interest rates changing, that could start to become even more difficult for people to get out of their rentals. But I think it's going to come down to what happens with the housing market going in the future and how the government intervenes, because if rental rates get too high, it's more it's obviously more um, plausible to just buy a house instead. So we'll have to see how the government intervenes. But listings range from $875 a month up to 61,000. Keep in mind, some of these prices are inflated because it is season now, so people have increased the prices, sometimes doubling and tripling. And obviously, a $61,000 rental per month is a bit of usually a larger house in a nicer location and has some special features to it. So we're going to take a look at December's data for the housing market. The average sale price. This is comparing the last 12 months. So you can see back in, actually, this is the last 3 years. Back in 2020, January, the average sale price was $450,000 throughout the entire MLS. That has now increased to over $650,000. So that's a $200,000 plus price increase over the last 3 years, which is quite significant. But if you take a look at the last 3 to 4 months, you can see that that's where the average sale price has really dramatically increased. That trend line really is not sustainable, at least for people buying houses. So if in fact that trend line does continue to increase, I'm sure we will see the market change quite drastically. Homes for sale. So before in 2020, we were at around 18 and 19,000 homes for sale at any one point in time on the MLS, which was quite significant. And we are now down below 4,000. So in the 3,000 range, homes for sale, which is a huge decrease. Obviously, inventory is low, and that is showing exactly how low it's gotten. And the days on market. So this is a good indicator of how the market is reacting right now. Obviously, the longer a property stays on market, it tells you the story of what the conditions are in that market. When days on market starts to rise, it means buyers are usually either willing to hold off on purchasing something until they find the right deal, or the fact that there just aren't very many listings coming on the market that are good that people want to buy. Shows depending. So this is another indicator as to what the market sentiment is. So shows depending means how many showings did it take for a property to sell. When that starts to go up, which it has, it leveled out 3 or 4 months ago, and it started to slow on its decline, and then it has gone up over the last month. So it's taking longer for properties to go off and more showings. All right, interest rate update for today. NerdWallet has the interest rate going from 3.074% as of 12/27, December 27th. That is up to 3.376 as of today. So that is a 0.3 percentage increase. Bank rate has the same thing, 3.19% on the 27th, up to 3.44% today. So that's actually up 0.35 percentage points. So that's quite a significant increase, and I think that is going to be a continued trend line upward, especially with the yields, the treasury yields, and the stock markets the way they are going. This is the United States Census Bureau's map of migration data. So the darker the purple or blue, the more people, the more people that are moving into that state than are moving out. So they have a surplus of people coming into the state. Florida is in the lighter purple, which is still about a 1% increase. And actually, if you were to zoom into Southwest Florida region specifically, that would probably be a dark purple area, because this is one of the hottest areas in the state. The states that are the biggest losers here are California, Illinois, and New York. They're losing the most amount of population versus the amount of people that are moving into their states. And then the gray states, mostly in the middle, are relatively unchanged for the market. They have a slight increase in population. Okay, a few of the stories that we had this week. We had the highlights. The Fed a few days ago released their minutes for their meeting, and that showed that they are going to be having earlier and faster rate hikes. So they are becoming more and more hawkish as they go on. Goldman Sachs is actually predicting up to 4 rate hikes this year, which could be an entire percentage point. And as we had mentioned actually several months ago now, even going up by 1% could have a significant impact on affordability for a lot of homeowners who are in the market currently and are on the edge of getting priced out. The Fed also did announce that they are looking to reduce their balance sheet much faster as soon as after the first rate hike, which is not typical. The last time they did have these bonds and were adding to their balance sheet, it took them 2 years after the first interest rate hike for them to start reducing their balance sheet. Some other data that was released: 4.5 million workers quit in November, which is a confusing statistic because it said that we actually added more. We had job growth, even though it fell 50% short of what we were expecting. We were expecting over 400,000 jobs added. We only hit 199,000. Even though that went up, we had more people quitting, simply because inflation is making prices, more difficult to keep up with as far as the wages if they aren't changing. But the other thing is that there has been this great resignation type of situation where a lot of people are quitting their jobs to find better jobs if they can. But that's that you'd have to do a little bit more research on. I just don't. I'm really not understanding the numbers, the way they're working. It seems like somebody's lying somewhere along the lines, but I really could not tell you where that is. Treasury yields also spiked over the last couple of days. They did today, as of today, they did go down slightly, but they're still up overall in the last 2 weeks. So this is the stock market, the sell-off. If you haven't been paying attention to the markets, there has been a pretty large sell-off since the beginning of the year, the first Monday starting the year. Overall, Dow, S&P 500, NASDAQ, they've all been down. And NASDAQ did have a little bit of a rally today towards the end of the day, but overall, they have all been falling down. Same thing is going for cryptocurrencies and tech stocks. Those were all down heavily. Even some of the bigger names like Tesla and Apple were hit a little bit as well. They didn't suffer quite as much as some of the other stocks like big tech, but they were hit. And then the future of housing. So a couple things that are on the horizon and have been, starting to gain a little bit of momentum or have been talked about. Rent controls. We've been talking about that for a couple weeks now. Minneapolis is already looking into doing this. I'm not sure if they actually have passed it yet, but I know that they were voting for it. So that is underway, and I think that is going to gain more popularity as time goes on, especially if the market continues the way it is, where home prices keep increasing at a crazy rate. We have inflation keeping up at a crazy rate. It doesn't show any signs of stopping as of yet. And then at the same time, when you have those two things going on and the banks aren't paying you anything in interest, you're not making any money, and your wages aren't going up, well, things start to get unaffordable on both sides of the coin, which is owning a house or property and renting. So when you have two of those going against, I think you will see government start to step in and do something. One of those things could be rent controls. The other one could be Section 8 expansion, so allowing middle-class families to qualify for Section 8 housing, where they have a government aid helping to pay the rental. So those are just a couple options. Not saying that they will happen. This picture comes from an article where a restaurateur is actually petitioning for $2,000 monthly stimulus checks. Personally, I don't think that that's a good idea because it sets a precedent for us just printing an unlimited amount of money. eventually needs to be paid back, and we are already in a huge deficit from our GDP for what we're actually producing versus what we're importing. And then the last slide, obviously, I want to just real quick cover the big macroeconomics, which would be Japan and Australia are starting to form a little bit of an alliance to try to keep China in check a bit over its power in the region. And then we also have China real estate sector is taking a huge hit. They had some days where they had to actually stop trading because the markets were going down so quickly. Shimao, which was supposed to be one of the most stable real estate companies in China, has also defaulted and will be selling all of their residential commercial real estate contracts, which did help actually rally the market, but I'm not sure what that's going to do to that company. But it seems like the dominoes are starting to fall in there, and I'm sure that with the GDP and what the real estate sector makes up in China, that probably will have some kind of a ripple effect to our shores as well. U.S. Russia NATO talks those are scheduled to they have been going on, but they are scheduled to continue, I believe, over the next couple days. So that's a tension there over the Ukraine situation and their border, the military lining up on the border. Afghanistan is in the middle of a humanitarian crisis. The government, obviously, when we left, we kind of we left it in shambles a bit, and when the Taliban took over, the rest of the citizens of that country are starting to fall into food shortages and suffering. So that's another huge issue. So there's a little bit instability in the Middle East there. Turkey dollar collapsed or is collapsing. Really has already collapsed. That's another issue going on. And then we have the central banks worldwide are really trying to stay ahead of our inflation because we are the reserve currency. So they have started to increase their interest rates to keep ahead of ours since we are that reserve. So those are the stories for this week. And I'm sure we will be seeing some more updates coming up in the next couple. Thanks for watching, and if you enjoyed this video, please hit that thumbs up button to let me know, and don't forget to subscribe and click the bell for more videos every week like real estate tips, new listings, things to do, and more. If you have questions, please don't hesitate to give me a call or send me a text at 239-310-5478. And if you prefer email, you can send one to rick@swflrelocationteam.com. Don't forget to register on my site to get access to loads of exclusive tools, data, and content like foreclosure and open house lists, buyer and seller guides, calculators, and access to the Southwest Florida MLS. Thanks again for watching to the end, and I hope to see you next week.